Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a fantastic week so far. You're halfway through your week. The weekend is nearly upon us. It's Thursday tomorrow. Today, guys, we're going to be jumping into Cardano, and I'm going to be telling you guys from the outset why I believe some more downside is to come for not just Cardano, but the crypto space. I have to be absolutely honest with you guys, and there's good news here and bad news, and the actual bad news, if you choose to take advantage of it, is good news. And that's what life is all about. It's all about adapting to a situation, finding that silver lining and rolling with the punches. So we're going to be jumping into it in this video. And let me just say from the outside, when I say there's more downside to come, that doesn't mean we're entering a bear market. That doesn't mean that the bull run is over. What that means is we're having a pullback after a pretty spectacular run. You know, Cardano essentially went from around about your $1 mark all the way up to nearly $3, which is like nearly 200%. A pullback is an absolutely healthy part of any market structure. And in actual fact, what this pullback is going to do is really allow Cardano to springboard itself up into the rest of the year. You guys know that I think there is a pretty spectacular year ahead of us. I think we're going to finish this year much the same we finished 2017. And prior to that, 2013. I think we're going to have a very parabolic end to this year. And Cardano, so far, in regards to its recovery, has shown a lot of strength against a lot of cryptos. And I think this is a trend that's going to continue. The reason being is because this is just such an impressive blockchain. There's so much going on. I was listening to some of the things that are going to be spoken about at the Cardano 360, not Cardano 360 event, Cardano 360 events tomorrow, the Cardano Summit. They're going to talk about something called Hydra, which is where you're going to see Cardano essentially take its throughput, its transactions per second from, I think we're 250 to 300 at the moment, transactions per second to 1 million transactions per second. To put that in perspective, guys, Visa does around about 65,000 transactions per second. That is 16, 15 times faster than Visa, one of the biggest payment services in the world, or the biggest payment processors in the world. You know, this technology is changing the world and is going to accrue value as a result of it. And it's important that I remind you that, and I try and drop that in every single video so that you guys understand what's going on here. You're a part of a technological revolution, and you guys get to be the early investors. You guys get to go back to 1998 and invest in things like Amazon, or sorry, not 1998, because then you'd be investing into the crash, but 2001. And you get to invest early in these technologies that ultimately implement themselves in the world in a big way. And crypto can actually do more so of that. So we're going to get into it, guys. So without further ado, without me rambling on too much to you guys and boring you all to death, let's jump into why I think there's more downside to come for Cardano. And I want to start with Bitcoin. This is the daily chart for Bitcoin. Now, you guys know, if we look at this sell-off here, this Wyckoff accumulation, or whatever people want to call it, these marginal higher highs, in hindsight, were a real telling sign. Today, guys, you have a similar thing at play. You've got very marginal, certainly here, very marginal higher highs. This shows a kind of a slowing down of the trend. And what we need is a kind of flush out before we then get more continuation. If you want to talk about marginal higher highs, I can show you hundreds of examples like these. For example, can you see here, marginal higher highs, marginal higher highs? You usually get a sell-off at the back end of those. Now, I don't think we're going to sell off back to 30k. I don't think we're going to sell off to anything below 40k. I just think we're going to have a bit more of a pullback than we're already experiencing. The RSI, guys, is a really telling sign, because right here you have something called a bearish divergence, which is where your RSI makes lower highs, and on the chart you make higher highs. This shows, like I say, a slowing down in the trend, and that you could potentially see a bit of a downside, much the same as during this sell-off, the kind of big catastrophic one that had everyone calling for a bear market, even though it was really just a lot of leverage that drove us down to this price. You had your marginally higher highs, and on the RSI you had lower lows. And this was a real telltale sign. I think you've got a similar thing setting up today. Now, that doesn't mean we're going to sell off by 50%. I need to keep reiterating that, because when I say I think we're in for a bit more downside, people panic and they go, should I sell? Should I do this? You guys know I'm a hodler. I've been in this space for 4 years, and I've hodled for 4 years. My Bitcoin I will probably never sell, and I don't need to sell my Bitcoin. I'm happy to hold it, even if it becomes a relic, because hodlers win in this market, guys. And people that try and time the market often get wrecked, because nobody, not even me, can tell you exactly where the bottom is. We can try and guess on these pullbacks, and we get them pretty accurate. I mean, for example, for Cardano, and there is a thumbnail up there when I called it. We called this as the bottom. In fact, we called this as the bottom for not only Cardano but Bitcoin, and we called this as you know, you're about to break out of your falling wedge structure as a trend reversal. Now, so the entire market follows Bitcoin. We can see that's certainly present today. You are going to have ups and downs within this, but you are really caught round about here, guys. This is a really significant level, and what I'm anticipating perhaps is, this doesn't have to happen. We could continue on from here. That's happy days for all of us. But I have to alert you to things that I see. You know, I spend every single day looking at charts. It's worked for me so far. It's how I've kind of made my way in the crypto space. And, you know, what I'm looking at right now leads me to believe that there is a little bit more downside before we then get continuation. You know, if we look at the fact that September, and this was something I talked about in other videos, you can see September, there's usually a sell-off in September. You know, this was September last year. What on earth am I drawing on here? Sorry, guys, my mouse pad for some reason. So this is September. This is September. You know, we can go back. This was September here, and then if we go to the bull runs, you can see here September, and we can go back to 2013, and you also have a bit of a sell-off in September. You know, the thing is with markets, they're driven by human beings. Things happen around this time of year. We could be seeing, in my opinion, a bit of a sell-off into September, and we could actually shoot back out the other side very early in September. And that's kind of what I'm anticipating. And this really sets us up for that kind of parabolic end to the year that I'm talking about. Now, that's enough of Bitcoin. Let's jump over to Cardano. And you can see you need to get above this EMA here and stay above it and reclaim ground and take out this high for us to see some real continuation. I don't actually happen to think that's going to happen. How many times do I want to say happen in one sentence? I think the more likelihood is that this acts as a bit of resistance. You perhaps sell off to this 50 EMA, which would also coincide perfectly with your previous local high, because we've not really seen a good retest. This has been a magnificent run, by the way, guys. So, you know, essentially from there to here took place in a month. So you could have if you put $1,000 in, you could be walking away with $3. If you put $10,000 in, you could be walking away with $30,000. If you put $100,000 in, you could be walking away with $300,000 in the space of a month. It's done a lot in a little amount of time, and pullbacks along the way are part of it. And this is what I think is going to happen. So I think you're probably quite likely to come back down to these sort of ranges before we then set up for continuation. And if we look at a bigger time frame, and I'm going to show you a number of things on this. Please pay attention to this, guys. Please, by the way, people asking me what charts I use, go and set yourself a TradingView account up. It's very cheap. I think it's like £12 a month for me. I don't know what that is in dollars, maybe like $17 or something. And it's useful if you're into the markets and you're looking for entry points, you're looking for exit points. Getting a TradingView account and using it and looking at these things and mapping out things like Elliott wave theories and overlaying fibs actually do help. You know, there is a TA in the circumstances of a crisis like we had back in March 2020. If you want to call that a crisis or whatever, you know, TA kind of goes out the window in those situations. But for the most part, it works. It really does work. And the reason I also think we're going to have a bit of a sell-off, it's not going to be anything of any kind of magnitude, I don't think. It could be, but even if it is, we can work with that and we can look for the silver lining and we can go, great buying opportunity. Because ultimately, we've still got this fifth and final perhaps wave, and lots of people asking me what happens after the fifth wave. We're going to make videos on that, talking about do we enter a bear market and does the Bitcoin 4-year cycle theory continue. But if you look at, you know, we've still got this to come, and you guys know in yesterday's video I reiterated it to you on a number of occasions. You're just here, you know, this was your third wave. This is your third wave here, and this is just your first impulse in that wave, because Elliott wave, the macro Elliott wave theory has a smaller Elliott wave theory playing out with it, and you're here, guys. And you can see once you've made, and we'll drop to a smaller time frame to really highlight this, and we'll show you some RSIs just to show you that there's a lot of things pointing to me that you're in for a bit of turbulence, essentially, on the flight that you're on. You know, you've got a destination that you're going to, but the flight might be a little bit bumpy along the way, and that's what we're expecting. And I personally, like I say, I don't time markets. I do a little bit of trading, but my trading part that I use to trade is about 5% of my overall portfolio. For those of you who wonder what exchange I use something called FTX. I don't have any referral links. I don't use referral links. You guys can go and set an account up. I probably will in the future. But you know, FTX is a good exchange to trade in. I find they did very, very well in the most recent crash that we had, whereas other exchanges just completely, you know, had a kind of freezing moment. I'm rambling on way too much, guys. I'm just trying to really. I'm not just. Lots of YouTubers out there say something and they have nothing to back it up. They're just saying it because somebody else did. I'm trying to show you why I believe that what's about to happen is going to. Much the same as I predicted, you know, this run that we were going to have, new all-time highs for Cardano. I'm trying to show you why I think you're in for a bit of turbulence now. So if we look at the first wave, guys, can you see what happened after this impulse? And it's really more highlighted better on the daily. And I'm going to jump to that in just a second. Can you see this? You come up and then you have a little bit of a kind of a pullback and a bit of a kind of easing before setting up for your next wave. If you look at the three wave, and how we started, can you see this here, guys? Let me make this a little bit clear and zoom out a bit. Can you see this? You actually have a bit more of a sell-off. You're doing the exact same thing today, ladies and gentlemen. You're at even the same point that you were here with your pullback. And if we look at the RSI, it paints a picture. What we're doing here is we're painting a picture and we're saying, look, based on all these variables, there's quite a high likelihood that this is going to happen. Doesn't mean it's going to. And in actual fact, might continue going on from here. We know we have the Alonzo hard fork, which we predicted around about a $4 to $5 mark for. Still entirely possible, guys. But this pullback is absolutely healthy wherever it gets to, and we're going to talk about it. You know, the bull run just doesn't magically go away at this point. So if we look at this first impulse within our three wave, look at the RSI here, guys. Let me line this up perfectly for you, actually. In fact, no, I won't be able to do that. Can you see the RSI here, guys? And it was much the same here, just at a lower down point, because this was really the start of this bigger kind of Elliott wave theory playing out. Look at where we are today, guys. Look at the RSI. Right around the same point, making the same sort of structure, ready to set up for more continuation in this fifth and final wave of potentially this Elliott wave theory that we have in play for you, before we then see perhaps a larger, deeper correction. So that's essentially why, or a few reasons why we think there is a pullback on the horizon. Now, you guys know, and I'll switch to a daily on this chart, that we use EMAs. Lots of people say EMAs are garbage, they're lagging indicators. They are useful to put into your charts because they can really signal, you know, in a downtrending market, they act as resistance and you keep coming up and bumping your head. In an uptrending market, they act as support. And if they continue to do that, it's quite a good sign of the direction. Look how overextended you are here, guys. And every time we say it to you on every single video, or mostly on every single video, you come up from this EMA and you get overextended, you come back to meet it at some point. And this, by the way, guys, was your start of your three wave. So one wave, two wave, three wave, fourth wave, fifth wave. You can see that this area here, you did the exact same thing. You were very overextended from your EMA, and then you come back to meet it before setting up, using it as support in an uptrending market. Had that beautiful trend reversal, falling wedge, and then you got set up for more continuation. And that's what I think's to come. And I've got to alert you to that. Like I say, guys, there's no point in me coming on here and saying something that I don't see and trying to feed you. Me coming on here and telling you guys that, look, I think there's a bit more of a pullback to be had here. Nothing too serious. And if it does get serious, we'll update you. But you're in my opinion. All my opinion, doesn't have to happen. If it continues, that's happy days for me. But I've been in the crypto space for long enough that I actually get more excited when the price of crypto goes down. Because for me, it's a buying opportunity, and I'm like a Dalek, accumulate. Instead of exterminate, I'm accumulate. Because I believe in this technology and what it's going to do for the world and the value that it's going to accrue as a result of it. You know, I think in the future you're going to see a $1 trillion market cap for Cardano. People say, no, that's crazy. I'm telling you guys. Now, I'm not a financial advisor, and nothing I say I will do on this channel is financial advice. But if this technology continues on the path that it's on... By the way, guys, I have a friend who is buying property on crypto right now. The innovation that is coming out of this space is amazing. And you guys, on the other end of the screens, I'm talking to you, get to be a part of that. And we gave you this tweet. By the way, Charles yesterday gave us an update on the how things are going in the Alonzo. He gave us a little update on the DGen. I think it's DGen algorithmic smart coin, algorithmic stable coin, which is an amazing idea. Things are going well, and the Alonzo testnet seems to be rolling out absolutely perfectly. And there's a lot heating up in the crypto space, and Cardano's in for a very, very good year, with some pullbacks along the way. And if you know what you're looking at, like we're trying to tell you here, perhaps you have a fantastic buying opportunity around the corner. I am going to be buying into this dip with the expectations that we are going to finish the year in a similar way to what we have in previous bull runs, and that Cardano's price, we still are sticking by our $7.50 to $10 price range by the end of the year, perhaps early next year. We're confident, or I say I'm very confident. Could be wrong, but we've been right so far. Go back to the start of my YouTube channel. I'm not saying this to brag. I'm saying this so that you know, it gives me some sort of credibility. If you go to the start of my YouTube channel, look at some of the videos that we were on about right at the start. We've been spot on about everything that's happened so far, guys. And that's because we've spent the time to learn about these markets, to learn about the projects that are involved in them, to look at the world as a whole and the direction that it's going in. We're moving towards a very global world. And cryptocurrencies are perfect for that agenda. So that is really all I have for you guys. Things look good. This was a tweet I keep bringing you back to, and essentially I'm talking about the good times being so good because of the bad times. You know, it's like, you know, you wouldn't really appreciate the sunshine if it wasn't for those rainy days. Joy wouldn't feel so good if it wasn't for pain. This is life, and ultimately you're going to have these down days, but you need to find that silver lining. In my opinion, these are fantastic buying opportunities. These dips. Dips are for buying in a bull market. You can see you're showing a little bit of strength here, but like I say, you need to get above here to really see more continuation and hold above it, and then that would kind of cancel out perhaps a larger correction. But ultimately, I think your real level of support is here, guys, and if not, down here where you kind of, you know, not the candle wick, the actual. So first line of support is this wick. Second line of support is really the candle body. So that's really all I have for you guys. That's me sticking my neck out on the line and saying perhaps a further pullback is on the table. If it doesn't happen, it doesn't happen. Happy days for all of us. You got to remember, I'm a hodler. I don't want crypto to go down necessarily. I do in some respects so that I can accumulate more with the expectations of me knowing where I believe this space is going, or thinking that I know where this space is going. You know, I genuinely believe everything that I say to you guys on these videos. Nothing I say is fabricated. But I think we're in for a very good year, guys, and I think a pullback is healthy. I think it's part of continuation, and you know, I'm not worried in the slightest. That's really all I have for you in this video, ladies and gentlemen. I hope you found it useful. I hope you found it entertaining. We are anticipating a bit of a pullback. The market's showing a little bit of strength right now. I think coming into that weekend, we're going to see a little bit of washiness, and ultimately we're going to keep you up to date every day. So I hope you've all had a fantastic day so far. I hope it continues to be one. You have a lovely evening, and I'll see you in the next YouTube video, ladies and gentlemen. Thank you very much for watching.